What is going on, everybody? This is Andrew from DeFiancy. All right, guys, it's been a while since we've put out a video. We thought we would start to regularly put these things out on Sunday night. We're just going to cover the week ahead, talk a little bit about what has happened over the past few weeks, what we're excited about looking forward, just the overall sentiment of the market, and just chop it up for a minute. So we're looking at the S&P 500's futures contract, and I like to start here, but I'm going to talk a lot more about Bitcoin probably in this video, but I want to start here because I think it's good to have just a kind of a broader context of the legacy markets. And we can see that we've had this very, very beautiful uptrend that started back in November, or I guess this was late October technically, last year. And I want to show you guys something about this market. So this is, oops, and I'm on the wrong time frame. Let's get to the daily. This line you see on the chart here, it's called the 21-day moving average. Some people like to use the 20-day moving average. It really doesn't matter. They're basically the same. But this is a very interesting technical indicator, and I'm not really like a huge fan of technical indicators really in a lot of my trading. I think most of them are useless, but this is a very interesting indicator when you're in a bull market, because you typically will stay above this moving average when you're in a very strong uptrend. As you can see, we've practically been above this 21-day moving average this entire trend. We had a really strong move last Thursday that broke us underneath it, and then we popped right back above it, and now we're just kind of fighting on this moving average. And actually, as we're talking, and this is the S&P 500's futures contract, so it might actually be a little bit different on the actual S&P 500, but it'll be similar. We're kind of fighting that moving average right now. So I'm very bullish on risk assets in general. If you've watched any of the videos we've put out in the past, we've gone over the primary reasons for that, which is really global liquidity. We believe that we are in a global liquidity upcycle that really started in October of 2022, and we're likely to continue in this uptrending liquidity cycle, probably going into the end of 2025. Now, that doesn't mean that markets move, in a straight line. You're going to have corrections. Most people thought we would have a much bigger correction than we've already had along the whole way up. Like most people were trying to short this thing. I say most people, I shouldn't say most people. A lot of traders were trying to short this because a lot of people just have this reflexive kind of mentality that what comes up must come down and all these things. And I get that. But when you're in a really strong trend, you really want to respect it. And I still think we're in that mode. Now, I don't want to really compare legacy markets like the S&P 500 or the NASDAQ to Bitcoin, because I do not believe they are really in the same, they're sort of incomparable in many ways, in the sense that like a lot of stocks, particularly the big tech stocks, a lot of the bigger stocks, they're, arguably overvalued, or maybe just a little bit overvalued. There's like debate there. There's room for skepticism on how much more they could appreciate this year. I think longer term, or going into next year, they probably will do well, but it is a little bit fuzzy, I think, and this is why I think that you might see this market start to range a bit more. Now, I was saying that lower, it just never happened, but now it looks like we're kind of getting into that zone. If this thing does not hold this 21-day moving average, which so far it looks like it's trying to, we would then look at the 50-day moving average. And again, I'm not really I don't use these moving averages all that much, but they're very useful when you have a very strong, developed, defined trend. So what would that mean if we had a breakdown underneath this 21-day moving average? You'd probably look for somewhere like 51.5, 5100 for ES. For S&P 500, it'll be a little bit different, like 50 basis points difference. But somewhere in there. And then let's say that we didn't hold that level, which I think we would. I don't think you're just going to blast through that level unless there's some kind of exogenous factor that just the market isn't prepared for at all. Then you're looking at the 100-day moving average, which is closer to 4,900 roughly. we're nowhere close to either one of these, but just to give you a point of reference, you're looking at about a 2.5% move to that 50-day moving average, and somewhere around 5.5 for that 100-day moving average. As long as we stay above these two moving averages, I think you have to maintain a bullish tilt to the market, or a bullish bias. If you were to get under this, then we start to change our attitude a little bit, in the short term at least. I think, like I said, this is probably going to start to range at some point more sideways. We do have some economic events this week that could shake things up, create some volatility, some nice trading opportunities. We have on Wednesday the CPI print. I've said this in many videos that we've put out in the past, that although these are important right now in the short time frame, these CPI prints are really not as important as they were a year ago. They're important, don't get me wrong. Like, for people who are managing very large amounts of capital, this is important to them. But even to these guys that are moving large amounts of capital, I believe personally that they are looking past the CPI, and they're looking at the fiscal spending that the government is likely going to have to increase to manage the debt. We've talked about this in the past, where the interest payments on the debt, I mean, there's really no way around them not buying treasuries at some point, aka printing money. So even if this were to go up, I don't think this is, and don't get me wrong, if it were to dramatically increase from here, yes, it would cause some problems, I think. But I do not think this is really going to cause issues if it's staying at like 3.5%, 3%. That might just be kind of the new baseline. Even though the Fed's not going to come out and say directly, like, yeah, we don't really care if it gets to 2% that quickly, I think that's what they're thinking. And there's other reasons beyond this. We've talked about this being an election year, and that I think it's kind of obvious that maybe they wouldn't want to break things in an election year. So I really don't think this is quite as important as people may think it is, like on Twitter and stuff. But it's something to definitely monitor, and you will likely get good trading opportunities out of this. So we'll be paying close attention to that this week. And then on the same day, on Wednesday, you have FOMC minutes, which to me is it's really a non-event, because basically what this is like they reiterate what they have said usually during the FOMC meeting that was a few weeks ago. So I don't really think it's really that important. I don't think I've seen an FOMC meeting, minutes meeting, where it really, moved the needle that much, past maybe a few minutes. And on Thursday, we have U.S. core PPI. This actually might be kind of important. I think that this could potentially be important. So we'll watch that. And then after that, we don't really have anything left. So I'm expecting a little bit of chop until we get through the early morning on Thursday, including Wednesday. If you get like a really cool CPI, meaning like inflation has gone down a lot, this market might start to rally again pretty quickly. But let's say it comes in as expected, you might just chop around until after this, and then maybe you get a more stronger move towards the end of the week. This is assuming, you don't have some kind of like exogenous factor, that like war or just something that's totally just out of left field that enters into the equation. Okay. One thing I do want to talk about before we get to Bitcoin, because I think this is like a really fascinating little thought experiment for me at least, is the U.S. stock market has now outperformed T-bills. So if you were to put your money, into one of these funds where you're earning like 5%, okay, it has outperformed. And this is, by the way, what a lot of bears and just people who are like, I don't really trust this market right now with inflation, they've been advocating that you should think about T-bills. And I don't think that's necessarily the wrong way, but it is kind of interesting that if you would have been in the stock market versus T-bills, you would have outperformed it on a pretty decent time frame now. So a lot of people are like, you know what, it's better just to stay in T-bills. Well, Not really. Yes, you reduced your risk, and I respect that. But the stock market has done pretty well over the last 12 months. And the reason why I mention this is at some point there's a lot of money into these accounts that are earning a stable yield that will leave those accounts if the stock market looks pretty calm and there's not a lot of risk factors that are like really basically if volatility stays low. At some point, I think people are going to realize that they're better off at least participating more, somewhat into the market. Now, I'm not saying like participation is like super low, but what I'm saying is there is a lot of money in these funds objectively if you look at the metrics, like trillions of dollars, okay, that could come into stocks at some point. And it's just, again, just something to think about there. Now, let's talk about something a lot more interesting to me right now, which is Bitcoin. Oh man, this is a beautiful chart. So let's remove some of this stuff here. As you can see, it's above its 21-day moving average. It hasn't even retested the 50-day moving average, which is showing a lot of strength. I'm surprised that this did not pull back a little bit further, but maybe we shouldn't be, and I'm going to show you why. Maybe we shouldn't be. So let's zoom out here, and I might have to pull up another chart. Yeah, I'm going to pull up another chart here. Bear with me, because I think I already have this pulled up for you guys, what I want to show you. Okay, well maybe I erased it. Okay, so let me show you something. So you're looking at this in a daily chart perspective, meaning each candle is 1 day. The last time, and I'm going to change this scale here so you guys see this a little bit easier. Bear with me. I want to show you something very interesting that a few people I've seen have pointed this out, like on Twitter. But I think this is very, very interesting comparison. So the last bull market, so we had this 2017, 2016 bull market, big bear market. And when we got back to the 2017 highs in 2020, this was like November 2020, I want you to look at something here. Look at this chart. We got back up to this all-time high zone, and we didn't break it on the first try. And we had a big rejection, big deleveraging event. You didn't even break the 21-day moving average. You didn't get to the 50, came back up, failed to break it out. But on the third try, it broke through, and you had a massive run after that. Now, again, I want you to look how that looks there. Okay? I'm going to zoom in. I really want you to get a picture of this. Okay? This right here. Right? Now look at this. It is really the same thing. You're back at all-time high. You had a failed rejection, playing around with this 21-day moving average. Didn't even touch the 50. Failed on the first time, failed on the second time, and now we're on that third time. So it's called a fractal. That's what that is. And a lot of people will use these fractals and like they'll actually use that as like their main trading strategy for a particular trade. And I would never do that, but I do think this is actually a pretty decent fractal here because it has the same psychology attached to it. Meaning, when people see price about to break all-time high, they get long. Like the market wants to be part of it. Why? Because as you've seen in the past, when you break all-time high, so if we go way back, the cycle before that, here, when you break all-time high, and very similar fractal here too, explosion. People don't want to be on the sideline when this thing gets into price discovery. Move me back over here. And I think this is, again, very important because it's the same exact thing playing out right now, which is people want to be part of it. They don't want to miss out. You have too many people that are buying leveraged positions up at the top. They get washed out. Funding gets reset. I can show you that. But funding gets reset, meaning that the premium to actually get into a long goes up. This is a very strong signal that the market is getting frothy when you have elevated funding for extended period of times, meaning that the futures price, the perpetual futures price, is higher than the actual underlying. That's usually a sign that the market is pretty aggressively long. Okay, and it can stay like that for a while. We were actually in pretty strong funding this leg, most of this leg here. Now we've reset that. People are not really talking a whole lot about Bitcoin right now. The market's just kind of been put to sleep. This is like the perfect scenario, really, by my estimation, for Bitcoin. Now that you've taken out some of the leverage, you still have very, very strong constructive price action, and you're sitting here right at an all-time high break. So that's pretty bullish. We'll just keep it simple there. Bullish. Okay. Now where would we go if we break this, let's say this week or next week? Hard to say. And that's why a lot of people want to be long before it happens, or better yet, a lot of people with size will wait until you have, and let me show you, a weekly confirmation, meaning that you've closed an entire week above all-time high, which we haven't really done yet. I guess technically we did. This chart might not actually be as accurate as some of the other ones, but we were getting rejected back under when we tried to break out. So this hasn't really confirmed a breakout. You're still trying to break out, I guess is what I'm saying. But if we were to confirm this like this week, by Sunday, and you might confirm it and keep going before then, but let's just say that Sunday we're establishing price action above this. We close that Sunday above this. I would very much expect that this is going to get very explosive. And at that point, you're kind of in like you're going down the Alice in Wonderland rabbit hole at that point. Like things will get weird, meaning the price will start to get really aggressive. And there's no technical analysis other than maybe a Fibonacci extension and some other things people will use. But for the most part, you're in what's called price discovery, meaning price will just get very overextended, usually Bitcoin in the past, after it actually establishes price action above its previous all-time high. So very, very, very critical moment. I'm expecting this to happen. It might not happen this week, might not even happen next week, but it looks like that's where it's headed. Okay. Let's talk a little bit about ETHBTC. And man, this has been an awful chart to watch. I mean, if you're an Ethereum, you value Ethereum. It's been a pretty tough ride over the last, I think it's like 40 months straight now, or not 40, like 30 months straight now. This thing has had a pretty rough time. So if I zoom out, you'll see what I mean. I mean, this thing has been getting faded versus Bitcoin for quite some time. So if you don't know what ETHBTC is, that is Ethereum versus Bitcoin. And this is important because think about it. Why would you want to hold Ethereum, which has, potentially more downside risk, if Bitcoin's outperforming it to the upside, right? Well, I'm not saying there's no reason to hold it, but a lot of people don't want to be involved in it until it actually starts to show some constructive price action versus Bitcoin, Ethereum that is. And I've said this before, so I'm tempted not to say it. I don't want to jinx it, but it's looking like maybe we're putting in a bottom here. And that would be very good for Ethereum and really good for the market in general. Altcoins typically go after ETH has like a very strong move versus Bitcoin in the past. Maybe that doesn't happen now. Maybe it just keeps chopping around, but it's starting to look good. But as you can see, this has happened before where we've had really strong weekly moves, but it got rejected. But we have the ETF narrative, tokenization of finance. There's so many different things with Ethereum that make me excited that I'm surprised that this has not moved higher yet, but it's looking like maybe, just maybe, we've crossed the Rubicon here. So we're going to keep a very close eye on that. And as you can see, Ethereum looks beautiful on this monthly chart here. If we look at the weekly, also looks fantastic. And let me show you why I think this is a great opportunity. So this actually retested this 50-day moving average twice bounced off of it twice, and now it's above its 21-day moving average, meaning if this thing starts to come down here, it's likely going to find some buyers. I mean, when you confirm a pretty significant moving average in a bull market, that's a good sign. So as long as this thing is above this 21-day moving average, I would look for higher. I mean, I'm looking for higher levels on ETH going into the next few weeks, and maybe probably the next few months. So very, very bullish there. Let's talk a little bit about Avalanche, which is another coin that I think is weird. No one really talks about Avalanche anymore. I know that they have, I think, a few more, or at least one more upgrade this year, I think. I'd have to double check that. But if you look at it, to me, it's a really good opportunity, mainly because it hasn't really done much this cycle, even though it's had a pretty nice start. We're on the logarithmic chart. Maybe the regular chart will illustrate just how much of a discount it still is at. If you go to its high, and I'll just take roughly, these double peaks here, this thing is still down like 60%. Okay. Now, was it overvalued up here? Probably. But this thing is significantly under all-time high, and I think it's coming back up to this $100 level, probably within the next 6 to 12 months. So we started to look at this mainly recently over the last week or so, because it's actually had a pretty decent retrace. I like altcoins in a bull market after they've retraced about 25%. It came under the 50-day moving average. Now it's sitting above this 100-day moving average. So what this means is, like, you've taken out some leverage. People have taken profit. It just has a pretty decent risk reward here, assuming it stays above this 100-day moving average. So it might consolidate here a little bit longer. It might even make a new low, but I really think that the risk reward here is, I'll just show you, pretty spectacular. So let's look at this here. So let's say, you long somewhere even, here at this daily high, roughly. I don't think it would break below this 100-day moving average for very long. So let's just put it slightly under that, like 15% roughly for 100%. That's a pretty good risk reward. 6.36 ratio there. Pretty solid, I think. So this is one we'll definitely be keeping an eye on, and there's some other ones as well. But I think this is where we're going to stop for today. We'll be doing daily write-ups in the Discord, getting a little bit more granular into these things in terms of the day-to-day stuff. But we want to start doing at least one video per week to kind of show more of a broader overview. And until next time, friends, happy hunting.
Hey, thanks for watching. Be sure to like and subscribe to our channel if you'd like more updates like this, and let us know in the comments, what do you think about today's video and DeFiancy update and insight? Also, make sure that you join our Discord, our free community chat, where we discuss things like this, what's going on in real time. Typically, our Discord community is the first to know what's happening, and we would love to see you there. Check the link in the description. And until then, we'll see you in the next DeFiancy Insight video. Bye for now.